Alrighty, we are back again. Juzzy is in the building, and we have a special guest with us. His name is Davis, but he is offline. And the reason he's offline is because he is a Bitcoiner who works in the TradFi space. So very excited to get to pick his brain and find out all about his world and how it intersects with Bitcoin.
Yeah, Davis is a recently newfound acquaintance in the Richmond area, but he is also I guess my chronological Bitcoin grandfather, because the guy who introduced me to Bitcoin introduced him to Bitcoin. So other than that, Davis is, again, great guy. Learned a lot from him. His perspectives on the engineering side of Bitcoin and how he moves and thinks in that light has been fun. And so, other than that, Davis, if you want to introduce yourself and kind of explain how you got here.
Yeah, good to be here, guys. Thanks for having me on here. Looking forward to the conversation. Yeah, um, Justin, I think we probably got introduced to each other. What do you think? 6, 12 months ago, somewhere around there?
Somewhere around there, probably about yeah.
Yeah, through a mutual friend. And yeah, I guess to kick us off here, a little bit about myself. I'm in my mid 30s, grew up here in Richmond, Virginia, engineering background, went to school here in Virginia as well, um, and was first introduced to Bitcoin through Reddit, believe it or not, back in 2013. Believe I was trying to go through the charts earlier today, and I think it was when Bitcoin first broke through $100, and that was front page of Reddit. And so I kind of clicked through, read an article or two, and it sounded interesting. And I actually remember the day that I read this pretty clearly. I was in the library at my university, and obviously procrastinating on my work. Came across this article, looked into it a bit, texted my dad, who was in TradFi as well. He was a bond broker for 25 years. And I was like, "Hey, Dad, have you ever heard of this Bitcoin thing? Seems pretty interesting. Seems like it could have some traction. It just broke $100 a coin. What do you think about it? Look into it. Get back to me." And he actually got back to me pretty quickly and was like, "Hey, this is pretty pretty interesting." And his response follows the line of a lot of people's kind of first initial reactions. And he essentially said, "Very interesting. It's not backed by anything. It's, you know, if it were ever to become successful and kind of foresee its potential, the government would likely block it." And so that's kind of where the conversation went. And I kind of forgot about it for few months, 6 months, 8 months, whatever. And I think it was my winter break later that year in 2013. Coin in the same year in 2013 broke through 100 and then 1,000. And I was like, damn, I could have bought it at 100 and now it's 1,000. And so being a, relatively poor college student, I was like, damn, I can't afford $1,000 a coin. What do I do? Not knowing that you can buy a fraction of a Bitcoin at the time. And so I was like, let me buy some Litecoin. And so that's what I did. I bought a couple of those. It was like, I don't know, 10, $15 a coin. And I think a couple weeks later, the market crashed and I sold it and then forgot about it for, I don't know, 2, 3, 4 years. Fast forward, I ended up taking a gap year after my junior year because I could not figure out which major I wanted to follow through with. My grades were pretty poor. Pulled myself out of college and ended up going back to college pretty late in the reapplication process. And so I had to scramble to find new roommates that I didn't know. And so I found them on Facebook, moved in with them. They were cool. Turns out one of my roommates was big into say, how do I put this? Things that are not necessarily legal within the U.S. Framework, but he used Bitcoin to acquire certain things like I don't know, things you might find on the illicit
Web,
dark web. Yes, Silk Road kind of stuff. So not
like
anything
libertarian
crazy.
books.
Yeah, so he'd buy like Adderall and other stuff, and he also bought like mushrooms and things. And so I found it pretty interesting. I watched him kind of acquire the Bitcoin, use it to transact with an unknown party across the country. A couple of weeks later, he got the stuff in the mail. Pretty cool. Um, Fast forward another year or two, I graduate, and sports gambling wasn't legal yet in the United States, and so I was using Bitcoin, believe it or not, to sports gamble on college football, pro football, stuff like that. And so I think the point that I'm trying to get at is I always understood the medium of exchange part of Bitcoin, but I never really understood the, true potential store value thesis underlying kind of the whole premise of Bitcoin. And so the medium of exchange aspect always clicked with me, even from like day one. That was always very interesting. But um, it wasn't until COVID to where things really started to click for me. Um, and I don't know how far I want to go into my own personal story, but um, I actually became aware of COVID prior to the big crash in the market. I actually shorted the market during March of 2020. Made a pretty penny, actually was able to afford my house because of that. Um, and so I'm looking at the world, the economy, the world shut down. The market crashed, I think, 33% in 3 weeks, if we're looking at the S&P or the NASDAQ.
Mm-hmm.
And then obviously the Fed steps in, QE, stimulus, all that stuff. I didn't understand any of that at the time, and the market's just ripping. And I'm like, what the hell is going on here? And that's kind of the same time frame where, the meme stock craze is going on, GameStop, Zoom, Peloton, AMC, all that good stuff. And I'm not understanding why the market is just ripping. Um, Nobody's working, nobody's, going out, spending money, all that good stuff in the Main Street economy. Obviously, Wall Street's doing very well, but for the life of me, I could not figure out what the heck was going on. And so as that's going on, I'm also looking to pivot from my engineering job that I had. I was an AutoCAD engineer. So I was doing consulting work for a company here in Virginia for the build out of 4G and 5G networks for your major cell phone carriers like Verizon, AT&T, all those big names. I felt like I was kind of hitting a ceiling in my career, and so I was looking to pivot. So one of my good friends was a financial advisor. I started asking them about his day to day. Do you like it? What's the pay like? What do I need to do to get into this career? And so I ultimately decided to go down that route. Took my Series 7, threw out some resumes, got hired by a firm, continued my education down that route. All the while, kind of in my personal life, after my 9 to 5, um, I'm still learning about the markets, the economy. I'm starting to dive into monetary history, the Federal Reserve. I'm starting to learn about all that stuff. Read a few books, and then my buddy, different buddy, sent me a video on YouTube from, you guys are probably familiar with Matthew Kratter, Bitcoin University. I watched that video and it kind of blew my mind, frankly. It was about Bitcoin. Um, and my job at the time, I hadn't fully pivoted to TradFi financial advisor yet. And so my engineering job, I had a lot of traveling, a lot of free time. Obviously, this is during COVID, so I'm like pretty much fully remote. So I'm just like going through podcasts pretty much my entire day, either on the road, going to job sites, or at my computer doing AutoCAD. And so I think I actually went back through my text messages today with this friend who sent me that message, and it was April, March 2021. And I think I went through over 100 Matthew Crowder videos in 3 weeks.
Wow.
And I have some screenshots here on my phone that I downloaded today, and I sent him a message that was essentially that said, I do not own enough Bitcoin. And from there on, it was just like an avalanche of curiosity, an itch to just learn more about Bitcoin, about monetary history, about the Federal Reserve, about everything under the sun that Bitcoin kind of takes you down in terms of rabbit holes. And so pretty much since 2021, I've been just obsessed um, with everything surrounding it. And all the while, I'm working, a TradFi job. I think a year later, 2022, 2023, I become a full-fledged financial advisor. And so pretty much for the past 4.5 years, you know, career-wise, I'm TradFi through and through, but obviously on the side, I'm just a full-fledged Bitcoiner. And so I think I'll probably pause there for a second if you guys have any
That's
sort of thoughts
that's
or
an awesome story.
questions. Yeah,
That's very cool.
yeah.
Couple of things I made some notes because there was quite a lot there, Davis. I appreciate you sharing that with us. So you said that the medium exchange clicked for you, but not the store of value. You want to kind of unpack that a little bit? And before you go, the reason I say that is because for me it was the complete opposite. Coming from Africa, we knew our currencies are incredibly unstable and just you getting debased like crazy. I don't know if Justin told you, but one of the stories that I've shared with him is uh, I had a business in South Africa where I was importing goods that we used to distribute, and there was a political shift. Our president didn't get what he wanted, and basically fired someone in his cabinet. And the currency that we used, the rand, slipped 30% basically in a weekend. And
Hmm.
so we just got 30% poorer overnight. And so the click of kind of the store of value for me, my hard currency, my sound money was the US dollar. And so
Yeah.
I clicked and understood the whole store of value thing. And I've been a Bitcoiner for a couple of years, 3, 4 years, also gone deep down the rabbit hole. And yesterday was the first time I'd ever sent Bitcoin. And it was one set that I received from Justin on Lightning. So yeah, the
Yeah,
store of value got it to me. So kind of
that's
interested
really
to
interesting.
kind
Yeah.
of unpack that store of
Yeah.
value versus medium of exchange.
Well, I'm sure there's a lot to unpack with geopolitical, currency, inflation, debasement, all that stuff. But obviously being in the US, you don't really think about that day to day. But I think it's just the different touch points that I had. Obviously, first and foremost, 2013. I saw that article on Reddit. Um, Obviously, the first thing on the white paper is peer-to-peer cash system,
Mm,
and so that was kind of first thing front and center for me. My first elementary understanding of it. And like I said, using it for Silk Road, like my roommate did, and then for myself, gambling. It was always for acquiring something. Um,
right.
so that was always, I guess, my first 2, 3, 4 touch points was that aspect of it. And then I guess my also elementary understanding of the monetary system, money, all that stuff. Um, I never really was thinking about inflation, debasement, or anything like that. And so you don't know what you don't know, right? And so
Right.
um, had no idea that there was a whole world revolving around store value. Obviously, once you're down the rabbit hole a good bit, you understand that a lot of things are used for store value, like gold, real estate, even the stock market. For you as the US dollar, so on and so forth. And so really didn't click for me until I started to study it more. And so I don't know
Well,
what
what was
else
the
I could.
moment with Matthew Crowder on? You said that was when it kind of all clicked. What was it for you there?
Yeah, I couldn't find the exact video that he sent me, but I remember watching that video, probably a few more, and then I went back further in his history of his channel. And I don't know if you guys know his history. He worked for Peter Thiel's hedge fund.
No, didn't know that.
I think like 10 years. I think it's called Clarium, Clarium. So he was a hedge fund guy, and so his channel started out, I think, Trader University. And so his first like probably couple hundred videos was all about how to trade, how to swing trade, technical analysis, fundamental analysis, all that good stuff. And so I went back to his videos about his kind of macro thesis, and that's where he started to dive into debasement, the dollar, um, why the dollar is kind of the world currency, why treasuries are the world reserve asset. And so I think at that point it started to click, but
Okay.
kind of that come to Jesus moment didn't happen until I listened to Michael Saylor on Preston Pish's podcast. I think
Okay.
it's Preston's like 8th episode on Bitcoin. It's called a masterclass in Bitcoin. And when I listened to that, that's when it all came full circle. And that's when I was like, okay, I got to go all in. And that's when the store value piece really clicked for me.
All right. That's
Um,
awesome.
and then from there, obviously, listen to Michael Saylor enough, and then you just feel like you're just way underallocated. Even if you're full ported across all accounts, your net worth, it's like, okay, do I start taking out debt? Do I start doing a home equity line? Do I start doing personal? So, um, it really didn't click until I understood, I guess, the US's role in the world, and then subsequently the dollar, treasuries, monetary history. And so I think coming from your perspective, South Africa, obviously a lot of other countries, Venezuela, Argentina, Turkey, so on and so forth. I feel like you guys kind of get that a lot quicker than maybe us in the US do. So,
Yeah, I would definitely say that. And then
Yeah,
one
we've
other thing I want to touch on before I hand it over to Justin is something that I definitely feel is a challenge for a lot of people is this unit bias thing. And you touched on it where you said, well,
hmm
Bitcoin was $1,000. I didn't have $1,000 for a Bitcoin, but I'll buy, insert your whatever meme coin
yeah,
because I can get more units in my account. And this whole like it's so trippy. This whole illusion of more units is more wealth, and I can prove to you it's not because I've had $100 billion in my wallet before. Unfortunately, they were Zim dollars. So this this unit bias thing, I think, is it's an interesting concept, that of the human brain that we go through, and I definitely think it's a barrier to entry for a lot of people in their
absolutely.
Bitcoin
I mean,
journey.
I think it's a testament to why like Dogecoin, for example, was so successful. Um, I mean, for what it's worth, it's still a proof of work coin, so props to them for that. But I mean, it's under $1, so why not buy Dogecoin instead of Litecoin or Bitcoin? Like
Mm,
that's just how the human mind works. Like, oh, it's only pennies. Imagine if it goes to $1,000 like Bitcoin, not knowing that there's magnitudes more units beneath it. But
yeah.
um, it's just really interesting how the human mind just gravitates towards, oh, something's cheaper, let's buy that, anticipating that it'll grow up to be what this other thing is.
Yeah, that's one of the reasons we called this measured in what, because they don't understand the denominator.
Yeah, it's all about the
yeah,
denominator.
it is very funny though. There's not been many people that I've run into so far in my just about 2 years of journey in the Bitcoin space of people who initially saw it as a medium of exchange. I genuinely don't know if I can count on like a sort of like a singular hand that was like, hey, that's why I understood it, not as a hedge against inflation, debasement. But I think that's pretty funny how, again, kind of a very similar to the Silk Road, kind of the early Bitcoin people I've met again, probably you and another person I've met who have been like, oh, way back in 2010, 2011, 2013, 14, I was using this to buy things with that pretty much allows me to go around certain regulations and entities and banks that wouldn't allow me to buy these items anyways. So again, I just think that's first off pretty cool. Second off, wanted to dive into your core, or actually, let's back up. I know the school you went to, great school. Engineering wise, what did you see on that front? Again, I think that there is a bridge that allows many engineers, whether it's there's various fields of engineering. First off, we want to talk about your field, and then second off, again, it's very complex. Engineers as a whole think on a different level than most. They're looking at how things are built down to the most fundamental level. How did that play into your time and the early days of kind of grasping the protocol and the governance as a whole?
Yeah, I guess um, for me, I don't even know if it's my engineering background, but maybe just, I don't know if it's my upbringing or just the experiences that I've lived through, but I've always been the type of person that if I want to understand something or invest in something or apply whatever to it, I need to see the big picture. Um, and so for Bitcoin, I would say it never really clicked until I saw the full potential of it. And so, like you said, you need to understand first principles, you need to understand the logic behind it, you need to understand how it works because, you watch a podcast or you watch a video or you read a book and it sounds too good to be true. What do you do next? Most people will either, just brush it off and be like, oh, it's a scam or it's bullshit or the government will ban it or so on and so forth, right? For me, it's like, okay, if it's too good to be true, that's either the truth of it or let's dig deeper. And so you need to understand it fully, both from a technical perspective, but also from fundamental perspective, and also you need to be able to kind of foresee its full potential. And so I guess that kind of ties into my engineering background. Like you got to understand how to build a bridge, or you have to understand, in my situation, how to build a 4G, 5G tower in order to, bring cell service to major cities, so on and so forth. Um, so I think for me, being able to understand it from a fundamental and first principles perspective is so important. And I think that's why it draws in so many engineers is because that's how their brain works. Um, you can't build a bridge unless you dot your I's, cross your T's a million times, test it, retest it, test it again. And so I think unless you have that full faith in the system or whatever you're building, you have to trust it. And so for me, it never really clicked until I got through not only Bitcoin itself, but the history of money too. And so until you understand the Federal Reserve, the history of central banking, fractional reserve banking, even going back as far as, shoot, using salt or seashells or bracelets or jewelry, gold, all that stuff, you can't really grasp what Bitcoin is until you see all of that. And that's how at least my brain works. Um, so I mean, yeah, I mean that's pretty much I guess why it clicked for me is because Matthew Kreider was able to break it down, the history of everything, the technicals, how it works. And so it didn't really click until I understood all of that before I, went all in on it.
Yeah,
Yeah,
it's definitely a
having
systems. You need to have a systems based way of thinking with first principles and be able to take any argument against it and really like see if that argument holds water, if it holds any weight. Um,
yeah,
certainly for
having
me when I went through it, what's fascinating for me on the other side now is how many people dismiss it and basically write off and jump to this conclusion that the people that understand Bitcoin and that are long Bitcoin and that are all in on Bitcoin are just tr- gambling, and that there was no proof of work, in order to get to this conclusion. That to me is fascinating. That people just write off other intelligent people, incredibly intelligent people, who would never take risks with their wealth without enormous research and thinking about this thing. I think that's kind of
Yeah,
trippy.
I remember having conversations with the guy who got me into my TradFi role today with my other friends. For me, it wasn't really. Bitcoin is the thing. It was once I understood the history of money, debasement, how to protect myself from, wealth destruction. It's more so Bitcoin's there. It could be a thing, but let's go through every other asset first and let's figure out the flaws of those. Once we figure out the flaws, we can exclude that from your thesis. It's kind of more like picking through everything else and then you land on hard money, essentially, as the only thing that can protect you. And so it's not necessarily like I'm going in on the all in on this one thing. It's more so what can protect me? Real estate, there's flaws there. Stock market, there's flaws there. Um, Cash, flaws there. And so for me, it was more so taking a deeper look at everything else and then coming to the conclusion that there's really only a couple things that really can protect you in the long run. High-end real estate, coastal real estate, that's not going anywhere. You can't create more Long Islands, you can't create more Hamptons, you can't create more San Franciscos, LAs, Floridas. You can't create more gold. You can mine it, but it's scarce enough to where it obviously protects you over time. And there's Bitcoin, finite, hard cap. There's nothing better than that.
Yeah.
And so it was more so I can't think of the term I'm looking for, but it's more so just pushing away everything else. I guess building your thesis around one thing and then just going all in on it,
Through a
basically.
process of elimination.
Yeah, thank you.
Yeah.
That's what I
And
was
even
looking for.
and even the high-end real estate, which I used to, that was my first job here in America. I used to sell high-end luxury lakefront property. And yeah, that was the whole thesis is, they're not going to build any more lakes. And that's true from a scarcity standpoint. But for me on my Bitcoin journey was understanding all those other asset classes that you mentioned. They all require incredible trust and have central authorities that basically promise you something and they can break that promise. And so,
Mm-hmm.
the other flaw that I learned about real estate, and I was full on real estate. I mean, I'm a real estate guy or was a real estate guy. It was interesting for me to learn that through Michael Saylor, the fact that Bitcoin, real estate's Achilles heel is you can get taxed to death, and it just
Property taxes, yeah.
yeah, it's the
The
property
half-life
taxes.
of property taxes, yeah.
Yeah, and when
Depending on
he
your
mentioned that, and
jurisdiction.
I was like, oh my goodness. To me, the other than if you take Bitcoin out of it, real estate is a great thermostat for monetary debasement because a plot of land in Miami is a plot of land in Miami. It is not changing at all. But if you plot that against the dollar over 100 years, it shows you clearly how a relatively scarce asset is being debased, priced in dollars.
Yeah, it's
Absolutely.
funny. You're almost well, it's not almost. It's the truth in the whole sense of the word, but you're having to take stock of multiple different systems that are all operating together, whether it's the central banks and how that operates, whether it's how the modern American government works, whether it's the Bitcoin protocol itself. You are actively having to study all three, how they fundamentally work, and then where they are in their lifespan relative to similar systems in the past. And without that, it is very difficult to see this random magic internet money protocol as a viable option if you don't see the workings and the stages in which those other systems are in. So it is definitely interesting, and it takes a lot of time and effort. But for those who do see it, you can definitely now you get the picture of why we sound like we're crazy. But at the end of the day, does take some time. Another part of your day-to-day is fiduciary responsibility, which I want to kind of explain how I ran into that. So it was 2.5 years ago, I got out of school and I was like, okay, like I've got a decent chunk of change in my back pocket. What do I do with this? And I just listened to my traditional 9 to 5 family approach on how to do this. And I was like, okay, like I'll take y'all's word for it. And went and got a whole life insurance policy and a bunch of other stuff and put my money in places I didn't really even understand what they were. So all of it was kind of peaceful at first because like the guy I was working with, like he was like, oh, like fiduciary responsibility is what we're playing off of here. Ultimately, I'm acting in your best interests. And so that like gave me like I remember like walking out with my now wife, and I was like, oh yeah, we're good. Like this guy's taking care of us. Oh, I mean, not that necessarily what he was saying was incorrect or anything, but how just for the people who are, I don't know, around my age who are for the first time being out on their own when it comes to preserving capital, preserving wealth, preserving money, kind of explain fiduciary responsibility and how it kind of plays into y'all's role and your thoughts on if it needs updating and or do you think that there's any possibility for seeing any changes there? I know that, and correct me if I'm wrong, but the SEC ultimately plays a role in the legal definition of fiduciary responsibility, but kind of walk us through how you play that out with potential clients.
Yeah, it's a good topic. And I'd be curious to hear more so about whoever sold you those policies was because I'm with the understanding that insurance brokers and salesmen aren't actually fiduciaries. Um, but I would say at its core, it's obviously like you said, it's putting the client first, the person first that you're dealing with. And so just as an example, if I'm bringing on a new client, it's not just like, oh, hey, like you have this 401k or IRA or Roth account. Let's put it in a portfolio for you. It's for me at least, we're going through at least 2 to 5 hours worth of questions, figuring out your standing in life, your jobs, your benefits, your risk tolerance, what your goals are, what you want to accomplish in life. And you can dive into any sort of aspect of that. You know, do you have kids? Do you want to send them to college? Do you want to pay for their college? Do you want to buy a house? Do you want to buy a second property? Do you want to retire at age 50? Do you want to retire at age 40, 70, whatever your number is? And so, at least in my role at my company, my broker dealer, they take, we actually don't offer our investment services up front. We primarily start with financial planning first. And so we don't even, at least for me, I don't even offer my investment services up front because, in my opinion, in my company's opinion, you can't really provide good investment advice until you know who they are at a deep level, not only financially, but personally, what your goals are, what your dreams are, what scares you, what keeps you up at night. And so, like I said, it's 2 to 5 hours up front, and then over time, it's ongoing conversations because life changes every day. And so, it isn't until we know who you are, what your dreams are, what scares you, until I can actually provide you any sort of investment advice, frankly. Um, and so, from that aspect, I would say if other advisors view it that way, I think being a fiduciary is pretty solid, pretty I think accurate, and I wouldn't say needs updating, but I know a lot of advisors don't look at it that way. They're looking to make a buck, they're looking to get paid, they're looking to just throw whatever assets they have into you know, build a bear model portfolio and they get 1% on that every year. Um, and so, in my opinion, the way that I do it, my company does it, my broker dealer does it, I think it's actually better than most. Um, but at the end of the day, you can't really provide advice to people unless you know who they are, what they want out of life, what their dreams are, their goals are, and what scares them, frankly.
How does Bitcoin intersect with that conversation? One kind of in your mind. Well, firstly, is Bitcoin even coming up in those conversations in your brokerage? Because it's obviously such a fringe asset right now, and we're still super early. I know there are some financial advisory firms that are talking about that. You've got the Rashads and whatever that kind of at the forefront of that. And then secondly, where do you see Bitcoin playing a role in people's assets going forward if the Bitcoin thesis plays out like we expect it to?
Yeah, on the first point, so I've only been in this career for 3, 4, 5 years now. But it started to come up a conversation around the time that BlackRock applied for their Bitcoin ETF. We started to get more inquiries about it.
Mm-hmm.
However, out of my entire client base, I'll tell you that I probably service around 100 households at this point. Most advisors, I would say the average advisor who's been in the field for 10, 20 years probably services anywhere from 100 to 150. I would tell you at most 10% of my clients have brought it up, more likely 5% at this point, but definitely more so in the last year or two.
Okay.
Um,
Is that as a result of the ETF being approved? Think
I think it's that. It's also just coming up more in, traditional
people's
media,
people's radars.
you know, legacy media, CNBC, Fox Business, Wall Street Journal, whatever media you consume. Um, However, my company, my broker-dealer, they do not allow any sort of solicitation, recommendations, advice on cryptocurrencies as it stands today. Hoping that changes going forward. I know, obviously, BlackRock, Fidelity, Schwab. Obviously, we're seeing news headlines every couple months, new broker-dealers accepting that this is a real asset going forward. And so I think over time it will continue to become entrenched in my world. But as it stands today, I'm not allowed to give any sort of advice on this. With that said, if a client brings it up to me, I'll talk freely about it, but I'll caveat it with I'm putting on my personal hat, not my financial advisor hat. And if I like the client, if I trust the client, I'll tell them that I own Bitcoin myself. I think it's here to stay. If you want to throw some money into it, I wouldn't, I wouldn't, you know, say that's a wrong thing to do. But being in the role that I am, I have to obviously choose my words carefully there.
Right.
However, we are able to buy ETFs for our clients if they come to us and say they want to buy it, but I cannot do it on a solicited basis. So I literally have to click a button that says this is an unsolicited buy, meaning the advisor is not recommending this. With that said, I went to a conference last year in Orlando, a Barron's conference, and Bitwise was there. They're one of the keynote speakers. I don't know if you guys follow them on Twitter or anything. Um, but I think it's the CEO or CIO, Matt Hugin. He's on Twitter. He's
Yeah.
actually a pretty good follow. Yeah.
Yeah, I know him.
He was one of the keynote speakers there, and he got up on stage like the first or second day in front of everybody there. I think it was probably like 500 advisors and kind of everybody surrounding the advisors, support people, and whatnot. And he asked the question, within your practices, how many of y'all, by way of raising your hands, own Bitcoin personally? And I would say probably 20 to 40% of them raised their hand, which I thought was pretty good. And then he had a follow-up question that said, within your practices, how many of y'all, invest in this for your clients? And I'd say probably 10% of them did, which I thought was pretty good, relatively speaking. And so I think it's starting to become a conversation point for a lot of advisors. In my world, a lot of what we can do, what we're recommended to do by our, for lack of a better term, our overlords in terms of who we work for, whether it's Fidelity or Schwab or whoever, you kind of have guardrails and what you can and cannot invest in for your clients. And so the more broker dealers and people that green light Bitcoin, more advisors will follow that. And so a lot of advisors are really busy. Like they have anywhere from 2 to 5 meetings a day. And in between those meetings, you're placing trades, you're prepping for your next meeting, you're calling clients, you're answering phone calls. And so I think at the end of the day, a lot of people are just very busy and they can't just take the time to figure out, oh shit, what is this new thing, Bitcoin? Like it seems like it's becoming a thing now, whereas maybe 3, 4, 5 years ago they would just written it off and just ignored it. Whereas BlackRock's pushing it, Fidelity's pushing it, all the big people are pushing it these days to where they can't really ignore it because at the end of the day, if a client calls you and asks you about it, you got to have an answer for them.
Yeah, and an
Even if you
educated answer.
even if you can't recommend it or advise on it, you got to be able to talk about it. And you have to, at a very basic sense, you have to be able to sound like you know what you're talking about, frankly. Um, so I think over time, as the price appreciates, I mean, the price itself is the biggest case for it. I mean, if it doesn't go up in price, then why are we here, right?
Exactly.
So I think to answer to come full circle on your first part of the question, I can't do anything about it in terms of my company that I work for today, but I could foresee in the next year or two, um, alongside AI, because we're now incorporating AI in our systems. Um, I think it's going to come to a point where clients will ask enough, and even if some of these companies kind of dig their heels in, like Vanguard and other ones who are kind of like, I don't want to I don't want to go down this route. If enough clients with enough money ask about it and tell the advisors and the people that they want to invest in it, they will come around to it because
Yeah, for
everybody
sure.
wants to make a profit.
Wall Street
So,
will sell you anything if they
yeah.
money
And
on it
so, yeah, I
and
mean,
get
at the
away
end of the
with it.
day, money talks, and if the clients want it and demand it, they'll come around to it.
So I was going to ask you if you thought there was a particular catalyst that would need to happen to make Bitcoin unignorable in front of the kind of average financial advisor. But you mentioned price is king. So do you have sort of a number in mind that you think that if we get to that, it's going to be glaringly obvious that the sirens are just going to be screaming so loud that you can't run away from it anymore? Do you think there's a number?
I don't think it's necessarily a number. I think if Bitcoin were to go on a run like gold did in this last year,
Hmm.
that'll spark a lot of conversations because I know, at least in my sphere, we now have gold in our portfolios. And so you go from 2,000 an ounce to over 4,000 in what, a year, 18 months.
Hmm.
And let's say I have a client who, they're making, I'd say on average, my clients are making anywhere from, depending on their risk tolerance and their allocations and everything, anywhere from 8 to 15% this year. Whereas their buddy who has a higher allocation to gold this year, they're probably making 20, 30%.
Yeah. I mean, gold's what, 60% up this year? Something like that, in that range?
Yeah. And so, for example, we have, I think, a 7% allocation to gold in our portfolios. Let's say somebody else has 20, 30%, and they're talking over dinner, that's their next door neighbor, whatever. Hey, my buddy has gold more than we do. Why don't we have more? And so if Bitcoin goes from, what are we at, 110 today to 200 within the next 6 months, 12 months, I'm sure those conversations will start to happen.
Yeah. I read somewhere they said when when your neighbor starts getting rich, that's when people's going to start jumping into Bitcoin.
Sorry, say that again, you cut out.
I said I read somewhere someone mentioned it on a podcast. It said when your neighbor starts getting rich on Bitcoin, that's when the rest of the people are going to jump. It's
I
going to
mean,
be
yeah,
like,
all the major touch points that I got into Bitcoin, 2013 it broke 100. Later in 2013 it broke 1,000. 2017 it went to 20,000. And then obviously when I started to grasp it fully, 2020, my buddy sent me a Matthew Craddock video. It was 60,000. The
60.
what's that?
Was it you said it was 16 or 60?
60
60.
in 2021.
And 2021. Yeah. Okay.
And so that's what sparks the conversations. That's where you get the video recommendations, the conversation spurring, and so the price drives everything. And so, yeah, I mean, you could pick a price, whatever it is, 200,000, 250, 250,000, whatever it is. I mean, that'll spark
Yeah,
people to
major.
make a change. Because as an advisor, maybe not in my specific role at my company, because like I said, we put planning first. We drive that home. It's not about returns. Like if your goal is to retire at 55, have a home, maybe like a lake house or a beach house, or put your kids through college. If you're going to achieve those goals and then you have extra capital to deploy, yeah, we can take more risk. But for those people who are seeking out an advisor and they're purely seeking that out for returns, which I would say probably is a good percentage of my world. It's not my world, but I'd say a good percentage of the financial advisor world. They just want to, make as much money as they can for the least amount of risk. If your buddy at Schwab or Fidelity is making 20% this year and you're only making 10%, like why wouldn't they go to the other advisor who's making 20?
Yeah. Are you getting much? So obviously, Bitcoin's kind of on the fringes there in terms of people's radar, but are you getting uh, much talk about debasement and just rapid inflation with your clients?
I've had zero conversations about debasement. Inflation, however, comes up a lot.
Yeah, that was gonna be.
It's
Go
always the
ahead.
grocery stores, the gas prices, just day-to-day expenses.
And
That's
they
that's
haven't figured
that's
out
what
that
comes
the
up.
one is the same.
They don't understand that they're correlated. It's always inflation, and a lot of people bring up inflation, but it's never debasement. And that's where the conversation needs to go to. Because I don't know if you guys are on TikTok or whatever, but you go through any sort of viral video about, the wealth gap or inflation or government politics. It's never about debasement. It's always about Republicans versus Democrats. It's always
Yeah.
about the rich versus the poor. It's always about this and that. It's never about debasement. And that's where the conversation needs to go. And that's where Bitcoin opens that door. Because, like we talked about, in order to understand Bitcoin, you have to understand debasement, history of money, and everything around that.
So one more question, I'll let Justin jump in. Based on what's happening in the macro environment right now, do you think there is a catalyst that could spark um, major debasement, hyperinflation, Bitcoin to the moon? Any one of those three? Is anything on your radar that you kind of looking at?
honestly, my view on this has changed a bit over the last couple of years. I don't see anything, at least as it relates to the US, that would spark any sort of hyperinflation event. But I think there are several catalysts that would cause Bitcoin to absolutely rip. Um, one being the US government starting to acquire, at least publicly.
Mm-hmm.
I think that would cause an absolute avalanche of just game theory other countries to pile into. I mean, to his credit, I think Larry Fink is thinking about this long term, and obviously it's probably not him thinking this, it's his advisors who are telling him to say this, but he frames Bitcoin as not as a store of value or a long-term debasement trade. It's more about uncertainty, political strife, conflict, and I think that's actually a pretty good way to frame it. And so I
Yeah.
think if the US goes down the path of, the political environment just gets worse and worse to where it's, full on socialist, borderline communist versus far right nationalist, I think that could spur some sort of, hard money, Bitcoin, gold, um, catalyst. Aside from that, I mean, I think it's inevitable no matter what. I think it's just how quickly it could happen is more so the question.
Yeah, I mean, we could get into a debt doom loop with the amount of debt that the government's holding right now, and they're going to have to print crazy amount.
I think if history serves any sort of lesson, central banking, you're able to pull out so many fucking rabbits out of your head that they can kick this can a lot
I was going
longer
to
than a
say,
lot of Bitcoiners think they can.
yeah, they can kick this can a long way down the road because people are sleeping because they don't even understand the debasement. They just, they understand groceries are getting expensive, eggs are expensive, whatever. But for the most part, most people, well, I mean, a majority of Americans can't even raise $1,000 for a medical emergency. So they're not paying attention to asset prices running away from them and really clicking that, that's debasement of their currency.
Yeah, and I think that exactly what you were speaking to on the clients that you have in your office or on a phone call, the whole concept or what they're bringing up are not the fundamental root issues, which again, I don't expect 95% of people to even understand what the term debasement even potentially even means, much less truly grasp it in the terms of this is ultimately what leads to inflation. Obviously, you have natural inflation in certain scenarios due to natural weather events or tornadoes or hurricanes that come through certain areas, but like long-term inflation is caused by the creation of new currency. So yeah, I think that we are just in this spot where, again, as long as you have that, I mean, it's ignorance, sadly, but at the same time, like, when are you ever taught? Like, no one in my family ever came through and explained this to me. Nobody in most families that I know have ever. I've never had a conversation ever in my 24 years of life outside of Bitcoiners. Like, never once was the term debasement brought up in any conversation with any adult ever.
Davis, was
So
your dad, or I mean, talking to you about this? Because you said he was in the financial world. Was he ever talking about debasement before
No,
Bitcoin?
no, never.
And we live in a
well,
fucking matrix, bud. I mean,
yeah.
it
I think maybe subconsciously or just through his career and understanding markets, he understood that you had to invest to get ahead.
right.
But I don't think
People
he ever.
understand that, but they don't understand. I'm not, maybe not your dad, but most people understand they have to invest to get ahead, meaning they can't sit in currency, but they don't understand why you have to invest to get ahead because
Exactly.
the money's broken.
Yeah, and I guess maybe to the credit of a lot of advisors, they're able to talk about inflation. And I think one of the main pitches that you kind of dive into when you're meeting a client for the first time is, you take risk because inflation, but it kind of stops there. It's like, oh yeah, inflation is 2 to whatever% every year. And so if you want to get ahead, you can't just sit in cash in your checking account because it's going to eat your purchasing power. But that's where the conversation stops. It never gets to the central banks. It never gets to monetary debasement. It never gets to debt. It never gets to any of that. And so I think, frankly, it's just education.
Financial illiteracy. It's crazy.
What
And that's probably part of the whole scheme of this world that I'm in.
Yeah,
You're taught through these tests like the Series 7 and the CFP and all this stuff, and it's not brought up in the textbooks.
by
A lot of
design.
these advisors are smart as shit. Like, a lot of these guys I've learned a lot from, but they've never been exposed to what I was exposed to through Bitcoin.
They
And if it
can't see the
wasn't for
forest for
Bitcoin,
the
if it
trees.
wasn't for Bitcoin, I probably wouldn't even be here today. Like, I don't know. Like, it's crazy. There's a lot of smart people out there. Even the average person, frankly, could probably pick this up pretty quickly if they were just exposed to it.
Yeah, it takes a little bit of, you've got to put your hours in, but it's not super complicated. You just got to actually be willing to ask the questions and risk feeling like an idiot for a little while and have your entire worldview shattered of everything that you thought was real. And then
And
once you
that's
get
like a
on the
lot
other
of
side,
people's like starting point is like they don't trust the system, or like they've been through the dot-com bubble or '08 and they know shit is kind of fucked, but they don't know why. And maybe they're just too busy, people have families, they have lives, they have busy jobs, and like they just if you don't know, you don't know, and so you don't really know where to learn about that stuff. And if it's never brought up to you, then you don't even know to look there.
I mean, I know
What
certainly for me, when the pieces kind of fit together, when I understood Bitcoin and then like all the other pieces around it, it was almost like a relief, like a weight was lifted off me, because in my story, I bought a business here and it was a fairly successful business, and I ran it tight, and I started building up a fairly large cash position, but I didn't know what to do with it. So I read all the real estate books, and at the time, the interest rates are going through the roof, so the real estate numbers didn't pencil out. I read a simple path to wealth, where you got to sit in S&P 500, and that made me a little bit of money. But as soon as I read the Bitcoin standard and like really understood monetary debasement and money printing, the whole world just it was like I took these foggy goggles off and I could just see clearly. And I know, the more I learn, it's gonna get clearer and clearer. But it was like a weight lifted off my shoulders, like, holy shit. I see things now, but everyone else is just in zombie mode.
What number do you guys use at your firm for inflation? Do y'all use the CPI? Because another thing with, again, I don't even know if this guy was technically a financial advisor or if he was just a life insurance salesman. Whatever, doesn't matter. We're past it now. We're good. But I remember like during my time with him, I was still in this life insurance policy. I was still going through, I guess he was outsourcing. I don't even know how this process necessarily works, but he was outsourcing another portion of my money to like S&P 500 portfolio, whatever, run of the mill there. But like this whole time that I was still in this, I was learning about Bitcoin. So like there's a period where like you think you know everything and you're just like, it all hits you at once. And I'm sitting there, I'm like, wow, like we should really be, again, you can't measure inflation entirely. It's completely dependent on certain markets and certain variables. But like a decent gauge is at least looking at the total broad money supply and how much it's growing by. And so like I was at it, like I was still talking with them, and I'm like, this was a point where I like wasn't fully convicted in Bitcoin, but like I was getting there, and I was like, okay, well, inflation's really like, we need to be looking at expanding in terms of thinking about it this way. Like I need to be having the same amount of the monetary network that exists in dollars at least. So I need to be thinking about like the 7% hurdle rate.
At
And
least.
then and then you're telling me that we're making what, 8% a year, 9% a year? Like we're barely growing here. And he's like, no, inflation's 2%. Like, don't think about it that way. And I'm like, dude, you're wrong. But regardless.
The CPI is right.
Yeah.
It's
Yeah.
not arbitral numbers.
So
That
I
is
was,
fiat propaganda.
yeah, I was challenging on that. I was challenging him on MicroStrategy, all of this, but that's a different story. But back to my original thought. Are y'all going off the CPI when it comes to your clients, and when they are kind of what y'all are forecasting for in the future? Because again, if you've got clients who are looking at, 10 years down the road for, I don't know, a second house or kids or, college for your kids, like I
It
don't
ain't
even,
2%.
I can't even begin to even understand how y'all can calculate for that, considering what we're looking at macro wise on so many different fronts. So I just kind of down that rabbit hole if you want to.
Yeah, it's a good question, and I can't speak for other firms or companies, but I think at least to my company's credit, we look at we don't just do a blanket inflation number. Um, so like I said, we do planning first, and so we ask them about their job, their salaries, what they anticipate in terms of raises and bonuses and all that stuff, but also like their expenses day to day. Um, so for kind of your everyday stuff, so think about like food, property taxes, stuff like that. We do like a blanket. It depends on the advisor. So like I do like 3 to 3.5% on that front, which is, in my opinion, still low. Um, for things like education, we do like 7 to 10% a year. For things like healthcare, Medicare, stuff like that, it's more like 7, 8% a year. And so we kind of silo different expenses differently in terms of an inflation rate. But for the most part, I would tell you that most advisors probably are way, way low on that front. And so I think we're conservative in that sense that like on average, let's say like food or cars or a new home, it's like anywhere from 2 to 5%, I would tell you that most advisors use. A lot of advisors probably just use CPI for everything. But at least at my firm and myself, we kind of silo different aspects of life. And so we might throw 3 to 5% on home values or food, gas, stuff like that. But education, healthcare, we definitely put a premium on that inflation rate. So,
Meanwhile, ribye's gone up like 40% in the last 6 months.
yeah, exactly. But like for an example, we build in for a lot of our clients, hey, you're retired. Your goal is to take a big trip maybe every year, every other year. That might be 10 grand, 20 grand, 40 grand a year. We'll just throw like a simple 3 to 5% inflation rate on that. But you're not really diving deep enough because you might want to go to Morocco or Spain or Portugal or whatever it is, whatever your goals are. You have to dive deep enough in your planning to know that different things will appreciate or inflate faster than others. But I think to the credit of the company that I work for, they actually silo those things differently. So I can't say that's the norm for my world, but at least what I do day to day is we try to silo different things that inflate faster than others. So
That's fair.
Yeah, I think that's ultimately how you have to do it. It's unfortunate you have to in the first place, but ultimately, again,
and
once you
like
can
even
bring
the
it
numbers
down.
that I'm using are probably way low, frankly.
Do you ever tell your clients that the natural state of the free market is deflationary?
That's never been brought up.
I don't even know what that. Yeah, I would love to see the response of everybody if you just said that, just ad hoc.
Oh,
Um,
shit.
what do you think that the future? Let's say that Bitcoin continues to do what it's going to do. Say that the federal government continues to act the way it's going to act. Again, it's kind of like what we're seeing with the treasury companies. Obviously, still very early in that stage, but ultimately, we're going to get to a point where financial advisors are going to have to not completely pivot, but like I could see a point in the next 10 years where it's not 10, 20 years, 15 years, whatever, where it's not completely out of left field to see a client with 50%, 40%, 30% of their portfolio in Bitcoin. I mean, right now we're looking at what BlackRock and all these other major entities calling for up to 4%, which is
I thought it was more.
awesome. It might be. I
I
might
thought
be behind on.
I heard like 10 to 15. I thought Fink was saying if you're scared. I mean, he
Oh,
frames it that
yeah,
like all the other countries that are not America, but
yeah,
he's meaning America. I mean, he's yeah.
yeah. Well, just your thoughts on the future of financial advising in that realm. I know that you and I briefly have talked about this before. Like, I just don't know where Bitcoin's going to take me, but like, I would love to help individuals, families, small businesses on this front down the road. Obviously, I have no understanding of how the technicals of financial advising works, but I do have a large head start when it comes to understanding Bitcoin as a monetary asset. Um, so obviously, you're going to have a lot of financial advisors and firms as a whole that are going to be well behind in picking up on what others already know. So my question is really, what do you think that looks like, and how do you think that individual firms and individual advisors can kind of catch up?
Well, I think on a long enough time frame, my hope is that my job is no longer a thing. Um, but I guess
Absolutely, yeah.
in
So there's
I
that
was going to
part of it
bring that
too.
up. I was going to say basically
the
a self-fulfilling prophecy.
but I think in the near intermediate term, I think, like I said, first and foremost, it's just educating advisors on what this thing is. And then from there, I mean, for people our age, I could see an advisor allocating anywhere from 10 to 50%.
And that's big.
Yeah,
What sort of time frame are you saying that in like the next 5, 10 years or like kind of now, next 2 years?
Yeah, I'd say 5 to 10 years
Okay, yeah, that
for
would be
somebody in their 20s, 30s, maybe even early 40s, 10 to 50%. Um, with that said, I mean, somebody who's retired, he's 60, 70, 80 years old, unless they have a lot of assets that they're planning on passing down to their beneficiaries, I would not feel comfortable putting more than maybe 10% in their portfolios. But, let's say they've got $5 million. They only need 2 million to live out the rest of their lives. The extra 3 million, why not throw 10, 20, 30, 40% into Bitcoin, gold, hard assets? I think that makes a lot of sense, right? With that said, I mean, it's all based on the client, what their needs are, what they want to do, what the goals are for their assets and their money. And so it's really case by case basis. And so, I mean, for us as an example, maybe you're married, you don't have kids yet, or maybe you have young kids, you want to pay for their college, you want to, maybe help fund their first home purchase, or you want to buy a second property for yourself. As a fiduciary, as an advisor, I'm not throwing all their money in Bitcoin. Um, you have to kind of break down their assets, what type of asset it is, because you can have a brokerage account that's just taxed at capital gains. You have IRAs, 401ks, Roth IRAs, and those all have different goals on different timelines. And so you really have to dig deep into who they are, what they want out of life, and what their goals are. And so depending on who they are, what their goals are, their asset levels, it really just depends on all those things. And then on top of that, what their risk tolerance is. Because a lot of people, you have a husband who's like, I don't give a fuck. Like, I don't care if the S&P goes down 30% tomorrow, I'm buying more. Whereas the wife is like, I don't want to see my account go from 500,000 to 400,000 tomorrow. Like, that scares me. I will lose sleep over that. And so you have to kind of thread that needle and really kind of align what you think is best for them with what they need from just a safety standpoint. And so over time, I think you'll see like BlackRock and Fidelity go from 3% to 5% to 10% to 20%. But I think there's going to come like a almost like a limit to where you can't really go past. I mean, for me and you, like if we're studying this shit every day, we'll go 100% all in. But for 90% of people, you can't do that. And so where's that threshold? It just depends on the person, what their risk tolerance is, and how far they're willing to take risk. And so we don't see Bitcoin as risky over a long enough time frame, but if their goal is to buy a house in 5 years, you don't want to throw all of it in Bitcoin because who the fuck knows what's going to happen tomorrow.
But as you said, over a long enough time frame, Bitcoin is going to become an ever a bigger piece of their portfolio
Mm-hmm.
as it appreciates, because it's got to appreciate faster than everything else if everything plays out. And so hopefully you don't ever sell the winner to buy the loser to dilute them.
Well, that's I'm sure will be another topic of conversation because the way that you build out a portfolio is like you have kind of your long-term holds that you don't really want to trade, and then you have kind of your, I'd say, kind of quote unquote model portfolios that you're kind of trading monthly, quarterly, however often it makes sense to rebalance. And so in my perspective, I'm going to put a client into a portfolio that's built out with ETFs, individual stocks, whatever the makeup is. And we'll rebalance that ongoingly, but things like private equity, real estate, Bitcoin, gold, you don't really want to rebalance that if you believe that one, it's going to go up over a long time frame, and then two, like things like real estate or private equity, like they have lockup periods and things that you can't really trade liquidly. And so you kind of silo that to the side. And as an advisor and as a fiduciary, if you're not really trading that thing, I shouldn't really be getting commissions on that or like a 1% fee on that. So there's ways to play it and build out a good mix of assets depending on your time frames and the different types of accounts, frankly. Because if you're 25, 35 years old and you have an IRA, who cares what Bitcoin does over a 5-year time frame, because you can't access that money until you're 59 and a half. Whereas if it's like a brokerage account, okay, and you're maybe saving this money for a house or your kid's education, maybe you don't throw everything in Bitcoin or gold or something like Nvidia, all in on something like that if their time frame is more like 5 years.
Another quick thought on this topic. You brought up and you just triggered something in my mind. I was having a conversation the other day over lunch with I think a guy who owned a financial advisor firm. He's retired now, whatever, yada yada yada. But he made an interesting comment towards the end of our lunch. We were talking about Bitcoin for most part of it. But he brought up the concept of like where we are, where the government currently is with its expenditures, where that will continue to head, how they will fund that. Do you think that, and he pretty much explicitly said this, like, be wary, like these accounts that like ultimately when you pull from certain retirement accounts, you get taxed to certain rates depending on where you're holding it, what vessel it's in. He was like, be wary of the government using that as a excess tax funding path
Mm-hmm.
for them. I don't know what your thoughts are there. Like for me also, like we're not out of it. Like I'm 25, 24. Like for me, like the way that I'm looking at it, like I'm very short the American government physically in terms of monetary policy and physical policy over the next 40, 50 years. Like, do you think that like some of these like 50, you said 59 and a half for the whatever it was, the Roth or whatever, like, is that like a thought in the back of your mind? I mean, I know that would be crazy to say to a client, but like at the end of the day, like what does this look like when I'm 60? When you're, I mean, it's 40 years from now. What does this look like? Like, will you be able to even access those funds?
Like
Like
6102, that stuff.
that's what that, yeah, that stuff kind of scares me. And then like, I didn't even bring it up. Like the guy who is fresh into Bitcoin, like kind of understands it, like was asking a lot of questions. But when he said that as a longtime financial advisor, but also a guy who understands where this is more or less heading on the federal side, like, is that a thought?
Oh yeah, and I actually bring this up to clients. For people under like 40, we don't even assume that they're going to get their full Social Security benefit. We might assume like a 50% benefit or 75% benefit. And it might be even be zero, like we don't even know.
Yeah, absolutely.
But they've played this game before with Social Security. Like they keep pushing out what they call the full
Age.
retirement age.
Yeah.
Right now it's 67, but they'll probably push it to 68, 70, so on and so forth, just to keep the Social Security Trust Fund solvent. Um, like the Congressional Budget Office does reports every year. I think the Treasury does reports, and it's set to run out in like 2032 or something. And so there's games you can play, like increase the withholdings or deductions you get from your paycheck, send more to Social Security every year. You can push out the full retirement age. And so I could definitely foresee a future where whatever political party's in power, they either raise taxes or they do some sort of games to where high income earners pay more on distributions from their accounts. I mean, that's what they did with Obamacare. Um, if you make certain incomes, you pay more for Medicare. They're roughly based on the tax brackets, but as an example, if you're a married couple, you make over $215,000, you pay more for Medicare. And there's like 7 brackets. So if you make over 215 as a couple, you pay more, and then next bracket's like 300, and then it's 450, and so on and so forth. And so there's going to be more and more games you have to play, and more taxes that'll be implemented if the government has to find a way to fund entitlements, remain solvent, you know, just all that stuff. So I can absolutely foresee a future where, let's say, UBI becomes a thing. How do you fund that? Well, you tax people more in one way or the other, and they can play games with that. And the popular thing to do these days is just tax the rich more. And so you get into things like, okay, people who have stock options, tax them at a higher tax rate than just capital gains. Or if you make over $1 million a year, you pay more for Medicare or whatever service the government provides. Like there's so many ways that you can just kick the can down the road that is also politically popular or expedient. So
Play fiat games, you're going to win fiat prizes.
Yeah, pretty much I know I brought it up to you today over text, but I was, while at work today, I was listening to that book, The Mandibles, which is, I don't know if you've ever heard about this, Justin, but it's a book that was written in like 2016. It's a novel about this family from like 2029 to 2047, pretty much like very close. And then again, this was written in 2016, so almost a decade ago, but it's like kind of this, I wouldn't even call it dystopian because there's a chance that all of this plays out, but like they're living through like where the U.S. government is pretty much defaulting on its debt, and the what's called a bancor, which is a global currency, is being implemented by other nation states. Like you have to pay, the treasuries have to be paid out in bancor, whatever yields have to be paid out, whatever. But like this whole thought process of like, wow, this isn't actually potentially all that far away. But on that side, it also, back to an earlier point that you were making with clients, like highlighting different fields, not necessarily the root issue, but in the book, there's talking about this like 17-year-old kid who's deeply understands why the bond yields are spiking to the 10 years spiking to 8% in the book. But his parents over here are like, oh no, President so-and-so is going to get it figured out. So yeah, it's just funny.
Yeah, absolutely.
You got any last thoughts?
Oh,
Justin,
good. I appreciate your time, Davis. That was a good conversation. Very insightful.
Any closing recommendations for anybody? I know that a lot of people take in different sources from different people, different groups, different companies. What are your go-to Bitcoin spots or monetary policy, whatever, monetary history?
I mean, for me, the medium that I use the most is definitely podcasts on YouTube and Twitter. But I mean, couple good podcasts that I listen to pretty much every time that gets uploaded are The Bitcoin Layer with Nick Bhatia. I would say pretty much everything Michael Saylor I just throw on and listen to. And every time I hear him, he's just makes me even more bullish on Bitcoin. But there's a lot of good stuff out there. I mean, when I first started listening to it, back when my friend sent me Matthew Crider, there wasn't a whole lot, but these days there's so much out there that you can just dive into. A lot of great books. And so, I mean, anything and everything out there, just you find a couple good people that you mesh with, and you just go down that rabbit hole for a while, and then move on to the next thing, because this is an endless pit of knowledge that you can just consume.
Never stops.
Yep. So.
All right, buddy. Well,
What a
appreciate
time
it.
to be alive.
Keep your computer on. Let me just stop the recording.